Ladies and gentlemen, welcome to the Milestones podcast. I am your host, Jared LeMay, and by now you should all know my co-host, Thomas Barakat. What's the good word, Thomas?
Hey, Jared. Great to be here today.
Awesome. It's been an interesting spring. We're getting into a good summer, and we're going to be having a lot of fun with OGRA in the coming months. So look out for that. But today we're going to be having some awesome fun. Today's episode, we're going to be discussing something that really affects not only municipalities, but the communities that they take care of. And so for years, insurance rates for municipalities, they've been rising at an alarming rate. And it not only affects how municipalities do their job, but the levels of service that they can provide to their communities. Tax increases passed down and acceptable levels of service and all that. Now, I think it's fair to say, Thomas, you got some good thoughts on this topic from a policy perspective, as it's been a major issue that we present to the MPPs at our yearly advocacy day. But I'm a little blind going into this, so that is why I'm pleased to have with us for this episode, good friend to OGRA, good friend of the show. You've definitely seen her at our conference, and they've hosted the Tuesday night socials. From Frank Cowan, which I believe is changing their name, but we'll let you speak on that in just a second. The Director of Risk Management Services, Jess Jaremchuk. Welcome to the show, Jess. It is a pleasure to have you on this show.
Thank you so much, Jared, Thomas. Always great to do anything with OGRA. And yes, as most people know, Frank Cowan Company was purchased by Intact Financial Corporation, IFC, in December of 2019. Frank Cowan, that name, it's been around for 94 years. So this is kind of a big deal for us and all of our friends. But I want to assure everyone that we are still a wholly owned subsidiary. We are still an MGA. There's no material changes to our operations, same team, same services, same expertise. It's really just our name that's changed, and it is now Intact Public Entities.
Excellent. All right, so we will let's get the ball rolling on this one.
Sure.
Sorry, Thomas, you want to start us off?
Yeah, of course. So I think this is going to be interesting, but I guess I'd like to preface this with the fact that you already mentioned this, Jared, but you have the Manager of Public Policy of OGRA, and you have a Director of Risk Management with Jess. So if either one of us starts getting too speaking with jargon and you're not understanding it, because so Jared's going to keep us in check, okay? So Jared's going to make sure that people who don't have a huge understanding or the lingo understand. So Jared, you feel free to jump in when Jess or I start kind of going off here on a different direction, something you just don't get, because I think is key to this discussion. So
definitely.
So I would say this. I think most of the people tuning in here probably know what about this municipal insurance rates and the costs are completely rising. It's been something that's since I've been at OGRA, now I'm here for 8.5 years or so. It's been something that's just been, this predates me. So I know for the past 8.5 years or so. But this has been an issue for a very long time, and it's not getting better. It actually seems to be getting worse. We have the premiums are skyrocketing. Some municipalities are seeing over 100% increase year over year. And this obviously has a huge impact on municipalities as well as their residents. So more money that has to be dedicated to paying higher premiums. What does that mean? That actually means less money for things such as services, infrastructure, and all those things that municipalities are responsible for. And it also means that municipalities are going to be hard pressed to find more money, which could end up in resulting in increased property taxes for residents of a particular community. So that is it's a huge issue. I would also just add a few other things here. Because of liability chill, you're seeing a lot of municipalities just being overly cautious about allowing anything on their property. It's because they're afraid of okay, I think Jess is going to jump in here at some point, but they're afraid of joint and several liability, and they're afraid of negligence. And two separate things. And they're both, we can talk about both of them today. But with the liability chill from municipalities, you're seeing things such as, municipalities shut down toboggan hills. You're seeing them being overly cautious in doing things such as over salting, for example, particular areas that they're responsible for, so that there's no slip and falls on their property, and that actually has huge environmental effects as well. So I would just like to kind of put that out there, and I guess to bring Jess into the convo here, I would like to ask, or not even ask, let's talk about why the rates are going up so much. And this isn't even particular to the municipal sector. I live in a condo, and my maintenance fees went up big time. And they said, well, Thomas, our premiums went up by 80%. So it's got to come from somewhere. And so I'll let Jess speak to that, because you're the best position to answer that or to talk about that.
Thanks, Thomas. Yes, we've definitely been talking about insurance premiums a lot. And like you mentioned, it's unique right now because it is not just a phenomenon for municipalities. This is not necessarily just a municipal issue. This is worldwide, and it is across all lines of business. But we want to focus on municipalities today. And, for the past decade, we've been talking about municipal insurance and what drives those premiums, and it's been claims. So we talk a lot about the long tail nature of liability claims, 7+ years from an incident for it to even, see a courtroom, amassing legal fees that whole time. We talk about joint and several liability and that 1% rule. We talk about apportionment of liability and the lack of contributory negligence. So more and more courts seem to be putting that responsibility on a municipality and less on that negligent plaintiff who was maybe wearing improper shoes to walk down the sidewalk, or knew the risks of tobogganing down the hill. We've also talked a lot about the damage awards being so high themselves, going from 5 million 8 years ago was a big deal. Now you routinely see 10, 15 million, and the main impetus for that is a double-edged sword. It's we live somewhere where we have access to incredible medical care, but that means catastrophically injured people are living longer, and we are paying for them to live longer. We are setting up mini care homes in their homes so that they can stay at home instead of going to live somewhere. So future care costs. I mean, if you look at an $18 million damage award, 15 million of that will be future care costs. So just looking after that person for the rest of their life. But that's what I've been talking about for the past 8-9 years. What's different now? Definitely some new factors that are driving premiums, and things are kind of scary. Some things that we don't have any control over at all. The big one right now is climate change and property. So climate change has resulted in huge increases in property losses and what we call CAT losses, or catastrophic losses. And regardless of this has impacted a municipality directly, the substantial escalation worldwide has increased property rates absolutely everywhere. And sometimes even getting access to property insurance, what we call like capacity, is getting harder and harder all across Canada. Munich Re, and I'll just read this stat for you. According to Munich Re, overall losses from worldwide natural catastrophes in 2020 totaled $270 billion. That was the fourth highest level in almost 4 decades. Canada, out of that, we were 2.4 billion. That is our fourth highest year on record. There's just no way around it that climate change and these property losses are having a massive impact on insurance premiums. Cyber is another one. Cyber is going through the roof. The claims costs, the uncertainty, underreporting from a lot of entities makes underwriters really wary of even writing in this space. Transit, we've had more high loss transit claims. Every single person on that transit, on that bus, if there's something happens, can bring a claim against a municipality. I'm sure that most people listening right now, whether it's your personal car insurance or it's your municipal insurance, you have seen dramatic increases this past year. And it's not in your auto insurance alone. Class
So
actions.
sorry,
Yeah.
just to step in there, the cyber insurance is actually a unique one for me, and it's really telling of the age we're in, especially with the pipeline in the States getting hacked and causing the shutdown there. We've heard municipalities in Ontario have had their computer systems hacked as well, and now they have to pay ransomware or pay off ransomware to get that back. That's something interesting as well. And if insurance companies are taking that into account as well, or offering cyber insurance as well, that's definitely a big reason. Also contributing factor, along with climate change as well. So that's a couple of things in this new age people need to really look at and really train their employees. I mean, not so much climate change because, well, I mean, there's stuff we can do, but not as much as the cybersecurity. You got to train your employees. You got to make sure they don't fall for these phishing scams. They don't click on weird links or anything like that. And I mean, it may not drop your premiums right away, but I mean, it's definitely helpful when you don't have to pay out those, like you don't have to pay out for these scams or anything like that.
Jared, it's so true what you're saying about, teaching and educating your employees, because a lot of, the way that people are getting into municipalities a lot of the time, or into any system, is not necessarily a system vulnerability, but it's a vulnerability in their staff. It's that social engineering aspect. So whereas a hacker is looking for that vulnerability in the system, social engineers are looking for that vulnerability in a person. And when have we ever been more vulnerable than during COVID-19?
Yeah.
Who's not going to be tempted to click on that link that says, click here to keep your family safe during COVID? Click here to get on the list for the vaccine. And the Canadian Centre for Cybersecurity, Interpol, they're all releasing these reports this past year that have, the trending on this type of social engineering is just going through the roof, and they see it getting exponentially worse.
Yeah.
With public entities like municipalities, especially those that have healthcare information. Maybe you've got a health unit or you run some programming, at a very high risk for this.
Definitely, yeah. Yeah, sorry, I cut you off there. You were
No,
you were moving on.
Just going to say class actions, and I have talked about class actions before, but there's just no way around it that they're definitely increasing in frequency. As Canadian courts are more willing to certify class actions, we've got a lot more lawyers pursuing them. And even though a municipality may be innocent, it still costs a lot. So we had a class action, and this is just an example. We had a class action that was commenced against a municipality for a breach of privacy. Again, kind of bringing in that cyber aspect, another reason why you're seeing a lot of these class actions. And initially, there was 85,000 potential claimants. Now, through the process of going through everybody's claims, it ended up only being that there was 40 claimants. All the submissions were carefully reviewed. At the end of the day, the damage payout was $113.
Really?
But the legal defense costs, all the expenses, well over $1 million.
Oh.
Wow. Jeez.
So in
the
the
lawyer's
end,
getting rich,
yeah.
and those people are getting about $100 in their pocket, if that.
In the end, the people who are most affected by it are not getting restitution, but the lawyers are getting paid. And I mean,
Lawyers are always getting paid.
Yeah, we live in a litigious society, so lawyers are a necessary evil. But that just seems like it's not. It doesn't even bring into the spirit of the law to make somebody whole again. And
exactly right. And people think that a class action is, but a class action, unlike bringing a tort or negligence claim, which is, the idea is to make someone whole again, a class action is different. A class action is meant to punish that company, right? So it's not even the same kind of philosophy that applies to a class action. And then unfortunately, I think a lot of claimants that get themselves involved mistake it for that. They see a very low cost opportunity, a low cost way to bring a suit against somebody because there's so many of them sharing that cost. But yeah, definitely more class actions. And then, COVID's brought a lot of uncertainty to everyone, and that includes insurance.
Right. And what has COVID not affected, right? But it's I want to go back to, or I want to kind of focus some more time here on joint and several liability and the 1% rule. So this is something we've mentioned. We've been advocating to kind of see some reform. Various governments, different stripes over different decades have kind of promised reform on this, but it's not easy. And I mean, to quote Chris Martin in Coldplay, nobody said it would be easy. But sorry, I had to throw the Coldplay reference. I know they've been the current government, and I think it's been a couple of 2 or 3 years now where they promised that they were going to kind of take action on this, and we haven't seen anything yet. And it's not, like I said, it's not easy, but what we're seeing even now during COVID, during all this other stuff going on. I mean, I've received, I think, 2 or 3 letters in the past week from municipalities that are passing resolutions and saying, hey, look, we still, this is still a top of mind issue. Everything else that's going on in the world right now, this is still huge. So, I mean, AMO, the Association of Municipalities of Ontario, they put forward a report, I think back in 2019, essentially asking for the province to kind of take the lead, and they presented some different options there and what could be done. A lot of people like to talk about the Saskatchewan model, which is it's a little bit different than what's here. Now, I think everyone in this conversation we don't want people to not be covered when something catastrophic happens. We're all here. We support those people. We have to support these people. I think it's a societal thing. But what is, do you have any, maybe not an opinion, but is there something, does Intact public entities, is there a preference in the insurance community? Yeah. Is there a preference in, I guess, the insurance community or whatever, as to what kind of way forward that we could see with this? Or is this something that you guys are kind of just staying out of?
First of all, I was going to say Frank Cowan Company. First of all, Intact public entities, we fully support AMO. We fully support Ontario Good Roads in all efforts, policy-wise, to have some sort of joint and several reform. Ever since I started at Intact Public Entities, Frank Cowan Company, 9 years ago, it has been something that's been a focal point for us in risk management, working with organizations like yours on this issue. My fear right now is that people want something to blame for what's going on, and my fear is that joint and several, or 1%, since it has been identified as an issue throughout the past decade and longer, I'm afraid it's becoming too much of a buzzword. I'm afraid that people are saying joint and several liability, but not really understanding what joint and several liability is. A couple years ago, there was, people using, when they were talking about the liability chill, I won't name names, and saying that it was, tobogganing. Tobogganing, we need tobogganing to continue in our communities. Joint and several has to go. Tobogganing, someone injures themselves, they sue the municipality. That's not joint and several liability. Joint and several liability, you have to have 2 or more wrongdoers. One person suing a municipality is not joint and several liability. What that is more talking about is the apportionment or the lack of contributory negligence. So I should be responsible that I went tobogganing. And if the court allotted me 20% responsible and the municipality 80% responsible for my tobogganing accident, the municipality isn't paying 100% because I don't have my 20%. They're just paying their 80%. Now, if there was 2 or more wrongdoers, I'm in a car, someone crashes it, I sue the driver and I sue the municipality. Drivers apportioned some, municipalities apportioned some. Yes, I could get it all from the municipality. It drives me nuts. I was just reading an article this week, and and someone was being quoted talking about joint and several liability, and the example they used for municipalities was someone tripping and falling or slipping and falling on a sidewalk and suing the municipality. That's not joint and several. And the reason why I'm so concerned about what may seem like a very minute point is that all of the examples that people are giving, those are issues. That apportionment of liability is a huge issue, but it's not joint and several. My fear is that people are going to push for joint and several liability reform without realizing that it's not going to have the impact on those claims that they think it's having an impact on. So I think that we need to make sure that people understand that, joint and severals here, we've got apportionment of liability issues here, we've got climate change and property losses, which are exploding. And right at this moment in a hard market, this hard market that the insurance world is in.
Sorry, Jess, what does a hard market mean? Is that just so people, I'm not really 100% sure about that.
Yes. Hard market. So the insurance market is a cyclical business. So it's historically been defined as either a hard market or a soft market. So a soft market is typically low rates, generous terms, lots of competition. So we've actually been in, maybe not last year, but before that, we were in a soft market for about 15 years. So let's say if you're a municipality and you went out for an RFP, you would have all 4 at one point players coming to the table, and those RFP results would generally yield a decrease, right? So there was competition. You were getting, a discount if you went out sometimes. In a hard market, it's opposite. Higher rates, restrictive terms. So you might be seeing on insurance policies, sublimits or maybe caps that you didn't see before. And definitely less competition. This past year, a number of municipalities in Ontario issued RFPs and, hoping for some competition. And there were times where there was only 1 or 2 people, sometimes just one, come to the table to answer that RFP. And again, that's not just a municipal thing, that's a hard market thing.
Right.
Over the past 5 decades, we've had about 4 hard markets. It's been about 15 years since the last one, like I said. And usually hard markets are, luckily, much more shorter in duration than a soft market, around 3 years. So it's difficult to predict when this current one's going to end. But unfortunately, most kind of professionals, people that are far more smarter than I am about all things insurance and, financial wise, it's going to continue into 2020.
I'm just curious.
2022.
What starts a hard market? Is this like climate change and cybersecurity we were talking about earlier? Those are relatively new. Is that something that is driving this hard market? Is it like the insurance companies and municipalities and I guess people in general getting used to these newer threats, or is there something else that is causing this hard market?
Definitely, there are a lot of things that go into a hard market. Some of it is just that it's the nature of kind of the financial or insurance industry itself to be cyclical. But definitely, as people have more claims and those sorts of things are affected, then you go into that impact on investment returns for insurance companies. So they have interest rates and investment returns are at all-time lows. So now you've got the underwriters less likely or more likely, I guess, to rely on increased premiums because they can't rely on the investment income anymore to absorb some of the poor results. It's just, almost like a storm of factors that create this hard market again. Now, hopefully it'll be 3 years and that's it. And we'll go back to where, a municipality can get some competition, can get some ease in not having limits on the property insurance or not having, being forced into higher deductibles, those sorts of things. But right now, some people can't even, it's hard for a lot of places to even get insurance. Like some industries right now are having a hard time even getting insurance.
Yeah. So I
Yeah,
guess the long and short of it is it's just
yeah.
sort of a, for lack of a better term, crapshoot of a bunch of
Yeah.
different things happening. Um, and I mean, like Thomas was alluding to earlier, joint and several liability, if we did get a bill passed, that may not have the effect people would
Hmm.
want or think
That's
it
interesting.
should.
Yeah, because it's something that we and you know, and this is why we need to have these conversations, just because this is something that's kind of, I don't know if it's not misinformation, but misunderstanding perhaps, is that we constantly hear that, whoa, once we reform joint and several liability, like our premiums are going to go down, or once we can find a way to reduce our risk, and the risk to for those 1% joint and several cases. We keep hearing that, oh, well, if we can find a way around that, our premiums are going to go down. So are you telling us right now that even if we reform joint and several liability, even if we made the public sphere way safer in terms of risk management perspective, are you saying that even that would not really have much of an effect because the current causes of these higher rates are actually something else?
I think that joint and several is a contributing factor. So it's not a silver bullet. So if you passed some sort of joint and several reform right now, no, it's not going to change your insurance premium. It's just not. Could it change your insurance premium 8 years down the road? Again, remember, liability claims, long tail nature, you wouldn't even see the results of joint and several reform for 8-9 years. That's something else that people don't understand. We won't actually see what effect that's going to have till 8 years down the road, right?
Wow.
When we actually see decisions. So either way, even if we were in a soft market and you implemented some sort of joint and several reform, it would be years before you would insurance companies would be able to predict how that would come out. And again, at the same time, you'd have to be addressing all of the other issues. Now, you mentioned risk management. I think that risk management, at least, you can focus on what you can control in a municipality. You can't control these insurance rates right now. So let's focus on what you can control. Let's try and make sure that if you have a claim, you're getting out of it quicker, or you are more prepared to defend it, or you're just not having as many claims. There are things that you can do, risk management across the board. So not just focusing on joint and several or one thing, you're focusing on good risk management across the board to hopefully bring down those claim costs for both your under deductible and over deductible claims. So I think that can help, focusing on things you can control in your municipality.
Right, and I guess that's why we, OGRA and formerly FCC. It was easy, but now Intact Public and IPE,
So IPE.
OGRA and IPE. We've been having these webinar series, the Vision Zero ones, and I guess it's the things that we can control, such as signage, such as different things like that. For us at OGRA, winter maintenance is a big thing as well, and how to make our roads safe in the winter months. But road design, I guess, is another one. So I guess for us, or for our members, if I'm watching this right now or I'm listening to this, I want to know what I can do. So I guess these are the things that we can do, but the things that are outside of our control, unfortunately, seem to be have the biggest effects on this. And and Jess, I don't know, maybe this is something we see. I guess you probably know a bit more about this than I do. But in states, for example, in the U.S., where they don't even have joint and several liability, I assume that they also have rising insurance premiums because of all the other things that you mentioned, like climate change, cyber security, all that sort of thing. So, I mean, maybe we just have to look down south to see that, like you said, this might not be the silver bullet that we in the municipal sector often claim that it could be.
I agree. They've got, that's the thing about the U.S. as well, that, every state is completely different and have different rules. But most states do enjoy caps, or like immunity caps for municipalities or for cities. But yes, you would see, issues with the things I mentioned, like the property claims, the climate, auto, that sort of thing. You would be able to see, and like I said, you can see this across the world right now. This isn't just Canada. This isn't just North America. This hard market is, and especially the climate change and the property losses, that's worldwide.
Yeah. So to mitigate against those things, it's actually we need to have a proper climate change, I guess, policy
Yep.
in place. And how do we, for example, and maybe we're getting not too much off topic from what we originally, but this is the nature of the discussion. Like, for example, like building in floodplains, like, maybe floodplain mapping is something that we have to kind
Yes.
of maybe invent, like those sorts of things, which we know climate change is happening. How do we kind of protect ourselves against it? And maybe those sorts of things can help us in the battle, I guess, in terms of high municipal insurance premiums. So maybe that's what we should be focusing on, rather than trying to reform. Well, I think we should still reform joint.
I think we could have
more
than one iron in the fire, trying to get a few things going. But I completely agree. And one of the things that intact public entities we're definitely taking advantage of with our new ownership is access to the Intact Center for Climate Adaptation that's at the University of Waterloo. And I guess I'm pointing because Waterloo's right there. So we are definitely leveraging that, those doctors and scientists there and working on getting that information to our clients. So definitely stay tuned for that. You'll see us focusing a lot on what we can do to help municipalities with climate change. And Thomas, you mentioned flooding. I mean, that's huge. That flooding issue is a big one for Ontario municipalities. So we're definitely going to be looking at that. But the large severity. So severity meaning really bad, costing a lot. Claims for municipalities are still those MVAs, the motor vehicle accidents, right? I mean, that hasn't changed. So I think that's why Intact Public Entities values the relationship with Ontario Good Roads so much, and we try to collaborate with you guys as much as possible, because that is a huge source of municipal claims. Those are those big catastrophic injuries. So working on things like Vision Zero and trying to give municipalities practical solutions, things they can actually implement to kind of get going on this instead of just talking about theory. I mean, I think that's been, what we together have been trying to do this year and are going to continue to do this year is give those practical solutions or things that can be implemented to start trying to help.
Awesome. Okay. You look like you want to say something, Thomas.
No, yeah, I was just, well, I'm not sure if you had something to kind of add to that, but I was just going to you mentioned the motor vehicle accidents earlier on. You mentioned people, confusing joint and several with just the negligence, or some maybe even in some cases gross negligence. Can you clarify, I guess, in terms of maybe the negligence? I think gross negligence is there's something going on there with the provincial government. They had passed something, and is there something municipalities should know about that? Or
so with joint and several and apportionment of liability, we're still just talking about negligence. So apportionment of liability is people not taking responsibility essentially for what they're doing, and the court's apportioning more of that to the municipality. Those people that remember the Bruce County decision a few years back, where a gentleman, riding his mountain bike, decided to use features in a kind of a park area before going on a trail in Bruce County. Went on these teeter-totters, went on one, it was fine, went on a larger one, didn't have enough speed to get over the fulcrum, fell, became a paraplegic in front of his whole family.
Oof.
Horrible.
Yeah.
But it's not necessarily the county's fault. So you would think at least, even if the court wanted to make sure that he was taken care of, his family was taken care of, 50% responsibility to the municipality, 50% to him. He willingly went and did this. 100% responsibility was given to the County of Bruce. On appeal, same thing.
Wow.
That is absolutely ridiculous, and that is not sustainable for municipalities. Yep. And that's why you have, because of decisions like that, that's why you have places like Bruce County having to then take away recreational activities.
Well, and that's the thing about that too, is you've got people clamoring for these things. You want public parks, you want skate parks, you want things for people to do. But if they're going to, and it really boils down to personal accountability as well. If you're going to take part in these things that your community is asking for, you've got to take a little bit of responsibility for what happens. You have to know. I mean, it's terrible for him to become a paraplegic for playing around on something. But when he got on these teeter-totters and decided to play around in this park, you have to assume some sort of responsibility. And I mean, yeah, like the 50-50 might have been great, but I do see the judge's side in, would 50% be enough for the rest of his life? So you've got a little bit in me that feels for the guy, and then the other half of me that says he's got to assume responsibility for himself too, right?
Yeah, it's hard. And I think that recreational facilities, outdoor recreational facilities are so important and becoming more important because of COVID. And, Thomas, you mentioned gross negligence, and I think municipalities may be hearing that last November, the government passed Bill 218 into law, raising the level of negligence that must be proven for a plaintiff to make a claim against a defendant for COVID. So this is specific to COVID. The legislation basically shut down any claims that allege negligence as the cause for a COVID outbreak at a premises. Instead, the plaintiff has to allege that the defendant's gross negligence, so not just their negligence, their gross negligence directly caused the COVID outbreak. This was a great thing and another tool for municipality. The legislation actually applied retroactively back to March 17th, which was great. So any claim that had been initiated, done. One fear, I guess, or thing to keep in mind, not that we're not completely grateful for Bill 218. Lawyers can take back that statement of claim, and wherever they put negligence, put the word gross in front of it. If I was a lawyer, I probably would. And why? It's never been tested in court before, so let's see what the courts are going to call gross negligence when it comes to COVID. Do I think that we're likely going to be successful in a lot of these COVID claims? I really hope so. I think that people recognize what an extraordinary situation COVID has been. And I think that move to the gross negligence is going to help out a lot. But people have to understand that just because of that Bill 218 doesn't mean there's not still a lot of costs that we're incurring right now. Legal costs. Yeah. When everybody just resubmits for gross negligence. Even if we win, we're still looking at a lot of legal costs and a lot of class actions right now, which is hitting, I think, the insurance industry pretty hard.
Yeah. And I mean, we need these insurance industries to be around. I know some people see it as a negative, but I mean,
we don't, right, Chair?
to make I mean, it's definitely necessary. If something, God forbid, tragic happens, you need an insurance company there, because you don't want to be out the millions and millions of dollars. You want something like an insurance company that not necessarily take the brunt of it, but that's been designed to help get you through something like that.
Yeah, and I think that and maybe now is a great time for municipalities to start kind of thinking about this. But as you're dealing with these, rate increases and probably very angry at your insurance company right now, like I get it.
I know my maintenance fees are going up.
I know. Mine too.
For 3 more years at least.
Rabble.
Yes.
I think that people should go, especially municipalities, go to your insurance company and see what they can do to help you in terms of your risk management, in terms of help you, especially if you're a municipality that doesn't have the luxury of a risk management department or a claims department. Use them to see what services that they can offer you. Because you're paying them that premium. Try to look at insurance right now as a service, not a commodity. So try and get whatever services you can from that insurance company. If they have a risk management department, use that risk management department. Get the education for your employees, get a road review done. If you're concerned about a stretch of road, design or signage, that sort of thing. Look at your insurer and ask what they can do for you. If you can't control what premium you have to pay, let's at least get some services for that premium.
Yeah, and maybe those services will help the premium come down later as the insurance company feels better about you.
Yes.
And as we hopefully head into a soft market at some point.
Yes.
Couple years.
All right.
Hopefully.
A couple years.
All right. That's a lot of fantastic information. This isn't as black and white as a lot of people make it out to be. And
yeah, seriously.
It was a really interesting conversation. Thank you, Jessica, for being with us. Before we sign off here, is there anything else you wanna leave us with?
Me or Thomas?
You, sorry, Jess.
No, they hear enough from me, Jess.
I don't know. I think they heard a lot from me today. You know what? I just want to say thank you for having me. It's been so hard this past year and a half, not seeing everyone, not being there at the conferences.
Right.
Just recorded something for NOMA yesterday. I miss going up north. I miss doing all these things. I miss seeing you guys. Yeah. I just want to, thank everybody again, and I hope that I get to see everyone soon.
Okay, awesome. Thank you very much. Is there somewhere people can reach you if they have questions about municipal insurance, or is
definitely
that something
about risk management? I may have
risk
to
management
off of its insurance.
Okay.
Yes. So my email address is still my first name, my last name. So jessica.jaremchuk@frankcowan.com. It will be changing to Intact Public Entities, but I'll make sure that that Ontario Good Roads has my information in case you want to get in touch with me.
Okay.
Sure. And then
go ahead, Thomas.
No, I was just going to say, and I would just say formerly Frank Cowan, released, there was the report on all this insurance stuff that you guys released back in March. And I would just say that maybe, Jared, if we can put that in the show notes or something, because I think that would be incredibly useful for anybody looking to learn more about this sort of thing.
Okay.
Yeah,
awesome.
That would be great.
We'll drop that in the show notes. We'll put links to the Frank Cowan Now Intact Insurance webinars that take place. We'll put that in the show notes as well. There's a lot of good information. It's not all black and white. Definitely do some research, do your due diligence. If you have questions about risk management, you have Jessica's email, and we're going to top it off there. So thank you, Jessica, again for being with us.
Thanks for having me.
Awesome. Everybody else, be sure to check out OGRA on our Twitter account, LinkedIn, and Facebook. Hit us up at podcast@ogra.org. Give us a shout. Let us know what you think. If you have any questions about this episode, we'd be more than happy to pass it along to Jessica. And until next time, everybody, take it easy.